joining me right now, International Monetary Fund Managing Director Christine Lagarde. Ms. Lagarde, always great to see you. Thank you so much for joining us.
Great to see you, Arya.
So much to talk about in Europe as well as China and the U.S. I know you're releasing your World Economic Report next week. Can you give us a sense of sort of the trends without going too specific before you release it?
Well, the trends are a little bit on the downside. And what is most concerning is that we see risks on the, likely to be higher on the horizon and bigger. And those risks are the Chinese slowdown in growth, the lower commodity prices for longer, and the financial tightening that we're seeing as a result of monetary policies across the globe, producing this effect both on exchange rate and on monetary policies.
I was reading your speech recently in Brazil talking about how the global players need to come together in the face of all of these risks. Have things worsened just in the last 6 months?
Yes, we think it has. Our baseline is a little bit lower. But what we see is the downside risks certainly higher. And we advocate very strongly what we call a three-pronged approach and more cooperation between all the key players. So what we mean by that is structural reforms that people have been talking about, which is about time to actually get done. Fiscal policy that has to be growth-friendly across the board. And I'm not advocating, fiscal stimulus. This is not where we are for the moment. And third, monetary policy that supports all of that.
Yeah, I'm glad you brought up fiscal stimulus, because for the longest time, it's 8 years now, we've been talking about monetary stimulus. And there was a report, I guess, this week in the Financial Times that you were encouraging the U.S., for example, to raise the minimum wage, U.S. officials. Is that the kind of fiscal policy that you would look to move the needle?
It has more to do with structural reforms.
Okay.
And we believe that, having 50 million Americans living in poverty, 40% of whom actually have a job, is not particularly satisfactory. And with growth being not low, but not particularly high in the U.S. North of 2% is okay, but it's not great. And with the job market where it is, we believe that it's time to actually look at those, minimum wage issues with a view to increasing growth, with a view to producing a demand effect in the short term, and hopefully, supporting the economy.
Look, people look to you for leadership in this regard, in terms of your recommendations, your suggestions. That's one thing. A year ago, you were making a recommendation about monetary policy. You saw where the economy was, and you were public about it and said, look, we need movement on the part of the Federal Reserve, on the part of European policymakers, because you saw the economy was weak when, in fact, the whole talk on Wall Street was, let's raise interest rates. And you were cautioning, don't move so quickly.
Yes, we were. Yes, we were. And we are still saying today that monetary policy in the euro area, in Japan, I'll come to the US in a second, need to continue to be accommodating. Those policies need to continue to support and encourage growth, to facilitate borrowing by enterprises, and to have an impact on inflation, which is at rock bottom lows at the moment. In the US, we supported that the interest rates be raised gradually. Not as early as December, let's face it, but certainly gradually, and that those increases be data dependent. I'm really pleased to have seen the latest FOMC deliberations, which indicate a gradual, slow pace of increase, which will be data dependent. I think it's very important.
Frankly, they did wait a while. You said this a long time ago, but we'll leave that for another conversation. Did they go too far in Japan with negative interest rates there?
In
People
Japan,
worry about negative rates.
Have a combination of, these three arrows by the Japanese authorities. And what is quite surprising at the moment is that despite this monetary policy that aims at bringing inflation up and supporting the economy, which should have the effect of lowering the yen relative to other currencies, we are not seeing much of that. And we're seeing the yen appreciating in a world and with policies that should produce exactly the opposite. So there are movements that we need to really understand a bit better.
It's still a work in progress.
It's the case in Japan. It's also the case in Europe, because we've seen the euro, at least holding, if not increasing a little bit, despite the very strong policies adopted both by the Bank of Japan and the ECB. But we contend that they have to just carry on, continue, be steady, and get the support that's critically important of fiscal policies and structural reforms
and then
all together.